there are a variety of cracks in the armor. I don't believe, however, that it's a guarantee that we're heading into a recession. I still think there is time for the administration to change their tactics, to change the footing of the economy.
Donald Trump's latest tariff wheeze is a 100% levy on films made outside the US, which is bad news for Britain since we're a massive global production centre for film and TV, often financed by American money. The president says America's own cinema industry is dying, quote, a very fast death. Hence his 100% tariff on foreign competition. Though perhaps making films that people want to watch again would be a more effective way of reviving Hollywood. The details, of course, are sketchy, as is the way with Trump tariffs. It might be much ado about nothing. Could be the name of a movie. But overall, Trump's obsession with tariffs is having a major impact on the US economy, which means we could soon be feeling it over here too. Let's speak now to Erik Hirsch, Co-Chief Executive Officer of Hamilton Lane. It's a leading investment management firm on both sides of the Atlantic. It's responsible for nearly $1 trillion worth of private equity investments. Erik Hirsch, welcome to the programme. Let me start with this. Erwin Stelzer, distinguished American economist, wrote in the Sunday Times yesterday that Trump was in danger of replacing America's animal spirits with uncertainty, which in turn was hitting business and consumer confidence. Do you agree?
I do agree with that, and pleasure to be here, Andrew. I think what we are seeing right now is a tremendous amount of uncertainty, which is causing a lot of volatility. It is difficult as a business leader across a lot of different industries to be a decision maker right now. You're looking for more data, you want more clarification, you're not getting that right now. And so what we're seeing is people are simply stalling on their decision making, and that is going to be an economic challenge.
Now, the economy contracted a small bit in Q1. I wouldn't want to overdo it. It's only 0.3% when you annualize it, so it's not huge. But I suppose the fear is, given what you've just said about consumer confidence and business and what Erwin Stelzer was writing about yesterday, the fear is that it's a harbinger of a major slowdown at best this year, a recession at worst. How do you see the rest of the year panning out for the US economy?
I think this completely depends on what path are we on. Right now, it's unclear whether these are actual tariffs that are going to be long-term or whether these are negotiating tactics. I continue to believe that it's more of the latter than the former, and we continue to see new things come on, things come off, things come on, things come off. So again, that's creating the uncertainty and the difficult in decision making, but it's not clear that that's actually going to be a permanent economic challenge. So what we need to see is, are these going to be permanent, at what levels and for what duration? And then I think we can start to see what's going to happen for consumer spending, for manufacturing, and for the others. Your point on the first quarter was it was barely a blip. We actually saw very good jobs growth coming through recently, which was a bit surprising to the market. And consumer spending is a little erratic. The top end of the consumer is still spending pretty aggressively. The middle consumer still relatively strong, slowing down a little bit. And as always, it's those, unfortunately, at the bottom that are really getting hit the hardest. But again, from an economic standpoint, that's not a big driver of the overall economy.
Well, consumer sentiment is overall at a 10-year low. Capital investment is taking a holiday for now, I think, as you suggest, to see what the lie of the land is. Cargo shipments across the Pacific are down by a third, which is unbelievable. I mean, dockers in Los Angeles will soon be laid off. So will truckers. U.S. airlines are cutting flights. Big Mac sales are falling faster than any time since the pandemic. Walmart has started a major discounting program. When you all add all that up, and even if some of the tariffs that Mr. Trump announces turn out to be temporary, as they sometimes have a habit of being, it does seem to me that it would be quite prudent simply to brace for a recession.
Yeah, I think there's a lot of signs right now that we are starting to head into a slowdown. So you've mentioned a number of good statistics. On the flip side, again, what we're still seeing is costs of theater tickets, cost of higher end dining continues to be strong. Hotel bookings internally relatively strong. What we're seeing right now is a real diminishing in tourism of people coming from outside the U.S. into the U.S. We've particularly seen a significant slowdown on Canadian visitors. And as you know, we're heading into the summer season here in the US, which is a time for typically high levels of tourism, and there's already some real signs of weakening there. So no question that there are a variety of cracks in the armor. I don't believe, however, that it's a guarantee that we're heading into a recession. I still think there is time for the administration to change their tactics, to change the footing of the economy, and you could actually start to see this come back pretty strong relatively quickly.
I agree. I think the right position to take is the jury's still out while being aware of the pitfalls. But here, as we talk about a slowdown or the potential for a recession, here's the other side. The dollar is down 10% since January. That's inflationary. Tariffs put up prices. That's inflationary. And doesn't that double whammy make it harder for the Federal Reserve to cut interest rates? You talked about how strong the jobs market was. No matter how much Mr. Trump huffs and puffs about cutting interest rates, it's difficult for the Fed to do it at the moment.
I don't see the Fed cutting rates for those very good reasons. So I think there will be lots of arguments from the administration about why they want rates to be cut. But I don't simply see the Fed taking that action anytime soon, given those inflationary pieces. It also creates a political challenge. So again, a lot of the voters of this administration are beginning to feel the pinch in the pocketbook. And so we're getting relatively close to thinking about our midterm elections.
Yes.
And so that's going to be another factor at play here.
Let me ask you this, since I've got you in the greatest news today. What do you make of this, Mr. Trump's latest tariffs, 100% on movies? Is that serious? I'm even trying to work out how it would work, what the 100% would be on.
I mean, given that movies right now are often filmed in multiple locations, I think calculating the math of that is going to be difficult. Do I think it's serious? I think we'll see in a few days whether his position there gets changed. If you go back to his campaign, however, talking about making Hollywood great again was certainly a line that got used frequently at campaign rallies, and he is nostalgic for sort of the old Hollywood and trying to sort of rebuild that industry. So is it serious? It may be.
It's ironic, given that Hollywood is a one-party state and it's not his party that's doing it. There is and it's very bad news for Britain because we are a massive production hub now. There are more Hollywood blockbusters made in Britain now than there are in Hollywood. But let me ask you this, because there's a broader economic point. Movies are classed as services, not goods. This is Mr. Trump's first foray into services, where the US runs a surplus, just as Britain runs a surplus as well on services. This could be, in terms of retaliation, dangerous for America.
I would think so. I mean, we are a service exporting industry. So to the extent that someone wanted to retaliate on services, whether that is management consulting, investment banking, money management, all of those things are services that would be extremely damaging to a lot of businesses if we start to head into a service tariff sort of tit for tat.
Let me ask you this too. Donald Trump, I see he's turning his attention now to more tax cuts, to rolling over the 2017 tax cuts, which come to an end, to adding some more in, no tax on overtime, one of his ideas, or on tips. But all this seems to be, as far as we can see, unfunded tax cuts. Does nobody care about the size of the deficit and national debt in Washington these days? Is there not a risk that at some stage the US could find itself in real trouble financing its debt, or at the very least having to pay a much higher price to get its debt away?
Well, today we already spend a significant portion of our budget on debt service. Do people care about it? I think people pay lip service. I think it's been a while since we've seen either party make a strong concerted effort to actually balancing the budget and reducing the deficit. Now, this current administration is doing a lot of talk about tariffs as a revenue generator, as you know, and so they are pointing to tariffs, and one of the positives about tariffs is a way to begin to pay down the debt. As you also know, there's been sort of cost-cutting initiatives that are starting, but neither of those right now are poised to offset the level of debt that is creeping up. I think it's one of the few reasons today why I think you're seeing sort of weakening in the dollar and a belief that the U.S. economy is no longer the safe haven that it used to be.
You know, Eric, tariffs can't raise you a ton of cash, and at the same time simply be a bargaining tool to get back to free trade. It's got to be one or the other. But in the final 30 seconds that we have before we lose you, a thought on Warren Buffett. 30 seconds on Warren Buffett retiring at the sprightly age of 94.
It's been an unbelievable run. He is absolutely going to be revered as an investment legend. It's somebody who also, I think, taught a lot of people who were listeners of him just the practicality of good decision making, showing calm in the face of fear, and prudently looking at how to deploy capital. I don't think we're going to see another one like him.
I tend to agree. Erik Hirsch, pleasure to have you on the show today. Investment firm Hamilton Lane is Erik's firm.